Hi Shane, how are you?
Good, Olga, and yourself?
Good, thank you. It's lovely to see you again. I'm sure that you have been much busier since the last time we chatted. There's a lot going on. There's a lot of debt. There's a lot of distress. Maybe we can sort of start again with a bit of a recap of how you help people, and what you're seeing at the moment.
Yeah, absolutely. Yeah, and you're right. It is a lot busier than probably last time we spoke, and I'm tipping you're in exactly the same boat, given the
Yep.
given the level of activity generally driven from the ATO and their love for trying to get money back, issuing all sorts of notices. Yeah, so look, where we can help is if someone's in some level of financial distress, whether it's corporate or personal, um, you know, we can either find formal, informal, and everything in between solutions. Which small business restructuring is currently quite prevalent in the corporate side of things, and as a result of a lot of potentially expired director penalty notices if they haven't come early enough. If they're not going to you to talk about payment arrangements, then we're talking to them about bankruptcy and then personal insolvency agreements via Part 10 and things like that. So so it's been a busy time across all segments.
Yeah. And I suppose for clarity, the difference between what we do and what you do is when we come in when a business is still viable, they're not trading insolvent and they want to pay, well, I shouldn't say want, no one ever wants to pay the ATO back, but they are in a position where they have a cash flow that with a viable payment plan that matches their cash flow, they're able to pay the ATO back in a particular time frame. The difference is often where you come in is where there is not enough cash flow to support the debt, or there is possible restructure solutions available. One of the things that comes up a lot when we're talking to people about a company debt is there seems to be a little bit of confusion around, and I call it pub talk sometimes, around when you've got a company debt, whether an event of insolvency or a liquidation will just magically make the whole company debt disappear, and that there won't be any ramifications for an individual director. That might be a good thing for you to sort of touch on whether that's true. And I'm guessing it's not true. Spoiler alert. And how that actually works.
Yeah, no problems. Yeah, look, it's you're right. It's not true. Look, and pub chat's good. We probably should call it pub chat. It's good because it promotes thinking and thought bubbles and discussion. But don't consider it pub advice because it's specific to their unique situation, and one person's solution isn't another person's solution. That's why it's always good to come and get advice, whether it's from yourself or from us or from the lawyers or whoever's involved, whoever your go-to person is. Quite often it's the accountants. But yeah, you're right. Like, in circumstances where they're capable and able to continue on an operating business, it's much better that they go to you and go through a proper negotiated process with the ATO rather than, if it's viable and they can pay it over time, then there's no necessarily need to come and see us. But if they've gone through a hard time and they are insolvent or on the cusp of being insolvent, then yes, going through some sort of formal insolvency appointment, such as, renegotiating out a debt position via a voluntary administration into a deed of company arrangement where you sort of offer the cents in the dollar, or from a small business restructuring. But yeah, it doesn't. Well, I tell people a lot that we use pens, not magic wands. So we can't make
I might
things
steal that.
disappear. So we can't make things disappear. So if you are a director and you have lodged everything with the ATO, if there's, as you would no doubt be aware, is if there's lodgements outside of 3 months outside of its due date, then that can just sheet home to be a personal liability by operation of law. So even though, yes, we can come in and liquidate or do a small business restructure or a voluntary administration into a deed, that personal liability will still attach to the extent that it remains unpaid, and in which case then, if the director has personal capacity to pay or personal assets, then it may be very much worth their while to come and go speak to you if they can't pay it straight away, and then get into some sort of negotiated position, and or they need to pay. But yeah, it doesn't make them all go away, which it'd be nice if they
Yeah.
did. But look, if they've lodged everything in time, it can, and that's why I say, like I said at the outset, it's very much dependent on your unique situation, what your tax debt makeup is, when your lodgements occurred, is there super involved? There's a lot of questions.
Yeah, and I think that's really important. There is no one size fits all cookie cutter approach for either what we do or what you do. There's so much that goes into it around what the client's background of compliance is. So whether they've lodged on time, whether they've been paying on time, whether the debt's going up, how long the debt's been there. And when you talk about, I like that, the pen, not the magic wand, we get asked a lot, can we make core debt go away? And so there is a difference behind the scenes and what we talk about, which is the actual tax debt occurred. Then there's interest on top of the tax debt. So there's a couple of things around that. What we do is we cannot, the ATO have no legislative power to get rid of core debt, so your actual tax debt, without an event of insolvency. So when we get involved, we can look at the interest, but do you want to explain how some of the negotiations work, which is a big difference between if you go through an event of insolvency, the ATO have the power to look at that core debt, whereas a payment plan, you have to pay that debt back.
Yeah, absolutely. And that's, and the same conversations that you're having are the same ones we're having, where they come to us and they say, I don't want to go into any formal of insolvency appointment, even though we are insolvent, but we're going to be fine. We'll come out of it. I just need you to make 200 grand of this tax debt disappear.
Yeah.
In which case you get there and say, well, go and have a chat to Olga, because if you've got 200 grand of interest, it can fix it up. But if you actually want to compromise core debt, then yeah, it needs to come through us, and it needs to go through a formal process such as a small business restructure, if you meet the criteria, or through a voluntary administration. And they're both designed for viable businesses that can come forward, and how that, in a very sort of short circuit way of trying to explain it, if you can offer a deal that's going to be better than a liquidation scenario, so if the liquidation was going to produce, say, 10 cents in the dollar, if you can offer 20 or 30, whatever's affordable and viable for the company, then you can offer that to the ATO and all your other creditors that are involved in that process to take that sort of deal. And if they all say yes, or the majority say yes, then that can go through and therefore compromise your core debt once that plan has been complied with. So to give you, and you mentioned it just a moment ago that, compliance is like such a major factor.
Huge.
ATO are weighting compliance very heavily when they're considering whether or not to accept a deal under a deed of company arrangement, or whether to accepting a deal under a small business restructure. So even though the deal might look good on paper, where you're offering 20 cents instead of 10 cents, the ATO might get there and say, well, they have been so poor at their compliance that we're not prepared to entertain it. So it's definitely a big driver for them.
I think one of the points you raised, though, which is something that I've been talking a lot about, is needing the right advice for the right thing. And I think the world today is so complex and complicated when you're running a business, whether it's a small business, whether it's a large business, or whether you're using a generalist advisor. But really, specialist advice is needed, and proper advice. I do like pub chat rather than pub advice, but specialist advice is needed in all of these things. And I did speak to a client last week that said they were doing their research, which I thought was a really good way of looking at as to what the best outcome is going to be. Because when you have a tax debt, I don't think there is a one size fits all at all. There are so many factors, whether we get involved and the business keeps running and they get a payment plan where they can afford and we're able to reduce the interest, or whether the business doesn't keep running. But then in both those scenarios, it goes even further. What does a payment plan look like? What's going to be the best payment plan? What's the strategy for that? And then the same with insolvency. It's really around the advice piece, not let's just pull the pin immediately, but that whole, whether it's a personal liability or which form of insolvency is best, or how do you structure it, or do we look at the licenses? And I think that's difficult for business owners at the moment when they're in such a time of stress. And we're talking about the mental angst and stress that comes with these debts, to then still have, I suppose, the capacity to be able to take all this information in and work out what's best for them next.